Oh, no, we're not over yet. We're not finished just yet. We got one more day left here this week. I want to make sure we make it count. Welcome back, guys. Time to get back to work. It is about that time of day again here, after all. Thursday evening, November the 18th, 2021. As always, my name is Joseph, and welcome. Welcome back to our nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades setting up for Friday. Not just any Friday. We got OPEX Friday, third Friday of the month of November. Only two left, right? The entire year of 2021. So I want to make sure we're ready for it and make sure we capitalize on the best trades for Friday. Speaking of the best trades for Friday, a lot of great trades setting up here in front of me here tonight. Got a range on the Emini. Would love to trade some breakouts, maybe some failures. Got a nice wedge here on the Nasdaq, right? Wedges oftentimes turn into runaway markets. We'll talk about how to trade that tonight. And the oil right now, oil is definitely bullish. You can definitely see that. We'll see how long it lasts, though. I'll talk about why I'm not quite sure yet about that oil long here for tomorrow. We definitely have some momentum for the bulls right now in the oil, but we'll see if it can hold. And I'll talk about a trade reversal along with the continuation on the oil here. Bunch of great trades setting up for Friday. By the end of this video tonight, you'll know my favorite trades setting up for OPEX Friday. You'll also know some stuff to avoid to keep yourself out of trouble, to help you finish the week in the green, whether you're trading on your own or you're trading with us tomorrow morning in our trade room. Before we jump into the video tonight, though, as always, make sure you subscribe to our YouTube channel. I publish this video every evening on this channel, my best trade ideas every evening. I don't want you to miss not tomorrow night's video, but next week's video newsletter. So make sure you subscribe to our YouTube channel so you don't miss any of the good stuff we publish here every week and every evening. If you have any questions for me, drop those questions in the comments section below. I'd love to answer any questions that you might have. And if you enjoy the video, if you guys tune in every evening, if you like the video as much as I enjoy making it, hit that like button, hit that thumbs up for me here. Really appreciate you guys taking some time out from getting ready for Thanksgiving to watch tonight's newsletter video. But enough of the intro, though. Time is ticking. Let's get ready for Friday's trading session. What do we got going on here right now? As I mentioned before, right? Got a range on the S&P, right? Lots of potential trades whenever we have a range. Got a wedge on the Nasdaq, maybe a runaway market, right? And a nice big pop higher on the oil. No shortage of trades setting up for tomorrow. Before we jump into each individual chart, though, let's just make sure we're all on the same page, right? Tomorrow's a Friday morning. Fridays are usually going to be a little bit of a smaller window of opportunity. But, I'll tell you the same thing I tell all of our students every morning in the trade room. I don't care what day of the week it is, what week of the month, what month of the year. We come in every morning, we trade whatever the market gives us. So, oftentimes Fridays are a little bit shorter window, a little bit less volume, a little bit less consistency. But hey, OPEX Friday, get a bunch of big moves today. Tomorrow could definitely be a very busy day tomorrow in our trade room. There isn't much news as you can see here tomorrow, right? In fact, there's really no major news. I would say probably the biggest news event for tomorrow is going to be Richard Clarida speaking tomorrow at 12 Eastern time. Now, he is the vice chair, right? So he is the kind of second in command, second to Jay Powell, right? The head of the Fed. And so, of course, we've been listening in to Fed speakers all week. Now, you'll notice he's speaking at 12:15, right? So we might have a nice morning session tomorrow, go on a quick lunch break, and come back to a little afternoon surprise on Friday afternoon. So definitely don't be shying away from anything good we see tomorrow afternoon, especially if Mr. Clarida gets this thing really moving for us for whatever might come out of his mouth here tomorrow. We do have a vote going on right now on the House floor on Capitol Hill regarding this Build Back Better, don't call it a stimulus, plan, whatever they're calling it right now. That is on the House floor right now. I don't think that's going to be too big of a catalyst, but it might be something that shakes things up overnight here. But those are kind of the only two things we're looking here on our radar right now, right? The vote on the House floor here in a few hours, possibly the overnight session, and of course the vice chair tomorrow at 12:15 Eastern time. Now, we open up our trade room every morning, 8 o'clock Eastern time. We're going to put the plan together tonight, and we'll go out and we'll trade that plan together tomorrow morning. I would love to have you there right there with me. I'll put all the membership information you guys need right in the description of the YouTube video. So grab that link, get registered, and I'll see you tomorrow morning at the opening bell. Back to our charts here. Again, no major news tomorrow. We'll see if that House vote tonight shakes things up at all. And again, we get the Vice Chair Clarita tomorrow right into that lunchtime session. Let's get this thing going tonight. S&P, Nasdaq, oil is all set to go. Why don't we grab the S&P 500 first? And really, in a nutshell, what's going on right now in the Emini, we get a bull market on the Emini, basically into a trading range. And so we talked about these kind of, strong trends into ranges. We've talked about this quite a bit this week so far. In fact, we've seen some bull markets, some bear markets, a lot of ranges on the S&P so far this week. How do we trade a market like this? What's the gist of a bull market into a trading range? Ranges act like magnets, right? So what you want to do is, with all this bullishness right now, you want to find levels of support underneath the range. And ideally, we want to get down underneath that range, trade what I call a failure pattern, look for a rotational move going higher, right? Mark up that new channel, and then trade the rotation, right? Going back up in the opposite direction. I can make the argument that the amount below the range will oftentimes be above the range. And then, of course, we can break above that area. We can then start looking for breakout trades as we go higher. There are, there are three kind of components to trading a bull market into a trading range. One of them is to look for what we call a seller failure pattern. It'll look a lot like this, right? Where it runs lower, the bears try to get short, they fail, and it snaps back up, right? So something along those lines, right, down below the low of that trading range, a seller failure pattern off support levels below. Then one of my favorite kind of add-on trades is to grab that first pullback off this new channel, right, as we go. The goal of this is to grab that failure when the bears fail, grab that pullback, and get that rotation going back up in the opposite direction, right? Going back up with that trend. Then you're going to want to take some profit off, right? Or at least look at a big chunk of profit off, right? At that pendulum swing. And then if we keep going through that high, if we go through that pendulum swing, then we start thinking about buying those traps and first pullbacks we see from there, right? So failure, pullback, and then breakout trade. And there are four different breakout trades. We've talked quite a bit about those here this week, but four breakout trades to keep in mind as we go higher. This is what's on my radar, here for tomorrow. So as we roll lower on this, right? If we roll lower on this, how do I buy it? How do I sell it? As we roll lower on this, the one kind of small detail about this is that we're coming in off the high of that range. When we come in off the high of the range, as you can imagine, just imagine, there's a big difference in momentum when it comes to a pullback like this, or when it comes to a pullback, right, that runs up and then back down, right? The momentum will be a lot stronger if we come off above the range, right? Okay, so I want to buy at support levels down here. If we can get that strong run lower, now we're going to rotate off the high of that range. A lot of momentum comes into play. I'm going to let the sellers try twice down here. It's a little variation, right, of what we call a failure pattern. Let those bears try twice. All their stops are sitting right above that high, right? The range is the magnet. Lots of bullish overall momentum, and I'm buying into those stop losses. Then we oftentimes see a strong push higher. Mark up that new channel. One of my favorite entries off the low of this new channel is a trap setup. Trap setups work great. Seller failure setups work great, right? And we're buying off of that channel. Then again, we're going to mark up the amount below, mark up the amount above, make sure we take a good chunk of the position off at that pendulum swing. And then do we keep going higher, right? If we do, we'll look for one of the breakout patterns we'll talk about here in a moment, right? So looking for that failure into that pullback. Again, I say pullback a lot of times to trap entry, and you'll learn more about that in our video classes, right? What traps are and what failure patterns look like. But that's how I'm looking to trade this to long side as it pulls back. How do we sell this market right now? Is it possible to sell it? Absolutely, you could sell it. The only problem we have now is we have to get the bears to hold this. So, for example, there's two ways to sell this if the market runs lower. One would be they hold the pullback off the moving average and they jump. If we get a pullback and they can hold that pullback right off the moving average, if we can get down underneath that range and the bears are able now to hold that pullback and jump, we call these 1, 2, 3 reversals, and we can mark up the new channel off the low, mark up the channel off the high, right? We start drawing the channel off the lows. That'll find our high, and we find the entry now off the high of that new channel. Okay, now obviously, right, want to sell the pullback off that channel, but a lot of times these entries are going to be trap entries, failure entries, and then into pullbacks, right? Once we drill down to a faster time frame there and take the entry. Where do you think the bears want to go in that situation? Where's their objective? Their objective is definitely going to be back down to retest these major support levels at the low. Now, there's one more potential short here that may come in. There's quite a few more, actually, but one to kind of keep it simple here would be, let's say the market kind of takes off and starts to grind down, right? Grind down. You know what I mean? It isn't exactly pop going lower. It just kind of pulls back and starts to grind. When that happens, same idea. Mark up that low, bring it up around that high, and then mark up those traps, right? Those prior swings, and we can look for those traps, right? Trap, failure, right? Off the high of that channel. Now, guys, I'm talking a lot about traps and failures and pullbacks right now. I want to give you a whole lot more information about how I like to trigger these entries in our trade room. I'm not going to go over all that stuff here tonight on this video, but if you want to learn more about the entry techniques we use and a whole lot more, I'll put a link for you guys for our quick start trading class. It's a free trading class. I'll put a little button up top there in the upper right hand corner. That class right there will give you a full roadmap. If you're like me and you're trying to earn income in these markets, that will give you a roadmap to follow. It'll make your job a whole lot easier. Not to mention, you'll see all kinds of examples of how we look for reversals into traps and everything we're talking about here in this video newsletter. So grab that free course, learn more about the entry setups we're talking about here tonight on the video. Now, as the pullback, right? We know how to buy it. We know how to sell it as it's going lower here. Want to just be aware, right? We don't want to trade in the middle, right? So if we get stuck back in the middle here, don't do anything with it, right? Don't do much with it. Stay out of the way. Wait for it to pull back, right? And then again, we'll look for the entries we talked about earlier. What if the market runs higher here, right? What's a breakout look like? How do I trade a breakout? What are we trying to do with this? Well, if we go higher here, the all-time highs are right there, 11 3/4. Okay, 11 3/4, that all-time high. Now, the all-time high shouldn't scare you, but we have to see some proof here, right? We got to see some good proof. So one breakout pattern will be the 1, 2, 3 breakout, right? Just like I talked about going lower, I can now look for that 1, 2, 3 move going higher. I can mark up that high. I can mark up that low. And I can now drill down to my faster time frame. This is a 5,000 tick chart, right? You'll learn about the time frames we use in the quick start class. But drill down to your faster time frame, right? And grab that first pullback. Right? It might be a failure. It might be a trap setup. Right? Oftentimes they're trap into failure, into pullbacks, right? Off of that low. Another easy kind of breakout would be a 2-try breakout, right? So for example, right, strong pop up, shallow pullback to the moving average, and a higher high in price. That 2-try breakout. Love those 2-try breakouts. Now, in this one, you really got to make sure you get a really strong push. Strong push up, shallow pullback, higher high in price. Love those traps. Always one of my favorite breakout patterns. I got a few more of those breakouts. We'll talk more about them as we go a bit later on in the video. So make sure you stay tuned for more on that. As we go higher here, could I sell this thing after we go higher? You definitely can. You can definitely sell this thing as it's going higher, but here's what you're going to want to wait for. If we do make that move higher, it's probably going to give us a bit of a channel here of some sorts. And I don't want to overcomplicate this right now, but let's say, for example, right? Let's say, for example, we get right? Let's say, for example, the market, right, pulls back, runs higher, right? And let's say buyers come in and buy it right off a new channel here. What you got to be careful with is there's a lot of momentum here, right, going higher. So let those buyers try a couple times before we look for that short off the high. What I mean by that is let them try once, let them try twice, and once those buyers try to keep it going a couple times, their stops are going to be hanging out right below that low. Now you'll notice I'm not doing it like this, right? One try, two try, then back down. You're not going to want to get too aggressive on a short when you got this much bullish momentum on the chart. So you want to wait for it to go one, wait for it to go two. As I always tell my students, the stronger the trend, the wider or the larger this two-try reversal needs to be. There's a lot of ways you can find the entry on this. One of my favorite is a trap. Right, little trap entry above that high. Another one would be marking up the low of those lows up around that high, right, and using that as a new hidden channel. And then one of my favorite ways to trade these reversals, again, this would be kind of a two-try reversal. One of my favorite ways to trade these reversals is to then grab a new channel and then look for that short coming off the high. Because remember, what's going to happen is the amount we go above the range is probably going to end up swinging back in the opposite direction, right? So you got your strong push up. Again, a lot of momentum here for the bulls, so make them try a couple times off the high. Make sure they're not able to keep it going higher. Look for that nice juicy signal candle to sell back down again. And then don't give up on it yet, because it's going to rotate right back down to these areas down here. Find that new channel, and then drill down to your faster time frame, hit that bull trap, right? Hit that buyer failure into pullback combo for that short going lower. All right, so that would be how I would look to sell this market, right, as it pops up off those highs here. Very difficult. Again, you don't want to be too aggressive right in the short side, just because, again, it is so bullish with the all-time highs right overhead here. The interesting part here will be, what I thought was very interesting was this area right here. Let's put a couple gaps in the chart there for tonight. You'll notice what was really interesting here is how no overlap there and no overlap there. You'll notice this is pretty rare. We don't see a lot of times where two kind of back-to-back candles like that don't overlap. You know, look at the chart in front of you. You can see there's not that many examples. You would think it happened more often, but it doesn't. And so oftentimes these areas almost like vacuums, right? So it'll be interesting to see what happens when it pulls back here. Again, I got my eyes on the buy side here. It'll be interesting to see, though, if that vacuum, right, kind of vacuums it, and if it is able to hold that reversal and give us those shorts down to that low. Only time will tell. Only time will tell. But at least now we know our game plan for tomorrow. Oh, where do we think, by the way, if the buyers do take control here, or if the buyers do push through this range here, where would we be trying to go? Where's the target for the bulls up here? It's always going to be whenever you have a range. Remember, the breakout leg, let's say, for example, we see a real strong breakout going higher. That breakout leg becomes the measuring leg. Almost forgot about that, right? So if we did see, let's say, for example, 1, 2, 3, right? Big move up. Find our new channel and then buy that first pullback, right? But where's the target going to be? The target's going to be this leg right there as a measuring leg. It's very, very reliable whenever we come out of a range. Right? Whenever we leave a range, that breakout leg is the measuring leg. And you'll see what I mean here as we go deeper into these charts here tonight. Right? So S&P, pretty straightforward. Bull market into a trading range. Will we get a breakout? Will breakout patterns going higher? Will we get a pullback? We'll see. Let's keep moving, though. How about some Nasdaq? How about some Nasdaq here tonight? Nasdaq's a little bit hairier, the chart tonight. Not as easy, not as clear, cut and dry. As the S&P. What's going on the Nasdaq? It looks like we have a wedge on the NQ tonight. Now, wedges oftentimes act like runaway markets. And so if you look at the wedge, we have a nice juicy wedge target up there, somewhere up in this area. You know, think about that 16,600, 16,610 area. Something up in that area. I say that area because wedges are oftentimes a little bit difficult to really pin down as far as exactly kind of exactly where the trend lines are to find that wedge. Now, the reason why you kind of know this is a wedge is because if you draw the channel across that high and you bring it down to that low, you'll notice they don't get anywhere near it, right? The buyers come right in, right, and buy off it, right? So if you draw that trend line up like that, right? Notice how they don't complete the rotation. Okay, you would think that would happen. You would think they would get that rotation off the low of that channel. When you see them hold above the channel low like that, generally that usually is a pretty good tip off. You have yourself a wedge. And again, wedges oftentimes turn into some very big runaway moves. The one kind of question that I have here right now with the Nasdaq, which is where I think a little bit of time will help us out here overnight. We got a couple measured moves here. One is a major measured move. If you were to go back to a 4-hour chart, for example, you would see line up the last few weeks of trading, and you'll see we got that 531.25. That's a pretty hefty level, and the market has been responding to these big measured moves pretty well. So we definitely have an idea of some resistance waiting overhead. And remember I said earlier how whenever you get a range, and that's definitely a range. You can see kind of they bounce around back and forth there. Whenever you see a range like this, the size of that breakout leg is the size of the measuring leg. So we definitely do have some resistance up overhead. That's going to be something we have to kind of watch here as we go. There is no doubt about who has control of this market right now. This market is clearly bullish, and really bullish with an exclamation point on the end, because as you can see, they finished the session right at that high. I mean, literally, one tick off that high. So there should be no doubt about who has control of this market, right? Unlike we saw earlier on this week where it was pulling off the high. So we know we're bullish. The question right now is kind of, where do we go from here? I think that's kind of the big question right now. For example, if we push higher right now, do we push higher and kind of run into that area? Do we push and go through it? This is going to be a big question mark. Do we pull back? That'll be a question mark. Do we go sideways up here? Because you can almost kind of see they might be performing a little bit of a range up here as we go. So let's kind of walk through this stuff. A little bit of this is difficult tonight because, again, there's a lot of possible variations of this. We don't usually have so many variations to worry about. Let's say the market continues going higher, right? Let's say the wedge continues here going higher. What you want to remember about a wedge, again, is the vertex, right? Where the wedge comes together. That's where the market wants to get to. When it comes to wedges, and my favorite way to trade them is to look for traps off the lows, right? So imagine now we push up, right? We push up, we go through the measured move, look for trap setups off the lows. Okay, and then once we start getting a little bit narrower, then we wait for that deep pullback to rope in the sellers and use a failure to snap back up to retest the high. Okay, this is what I usually look for when it comes to trading a wedge, right? I'm looking for traps around the edges. Okay, so imagine strong run up, shallow pullback, higher high in price, traps around the edges. Okay, and then again, once that wedge starts getting really, really narrow, then you're going, okay, there isn't a lot of space inside that wedge anymore. I'm not going to be able to get a good risk-reward ratio when the wedge gets really narrow up there. So we wait for the price to pull back. Now remember, don't let that pullback fool you. It's almost always a trap. And so when it pulls back, remember, the wedge will want to keep going up to that vertex, right? Again, in this example, we're going clear through these overhead levels of resistance. Okay? In this example, we're not having any trouble pushing through those levels of resistance. All right? We'll talk about what if they do here in a moment. Okay? So look for that trap pattern, that failure pattern, and again, we're looking for that run up to that wedge target, 16,607, 16,605, right? That area up overhead. Okay, that's one way I want to buy it as we go up, right? We push right on through, right? Right? The buyers buy it as it's going higher here. That trap, right? Run it higher. That deep pullback, rope in those bears, and make them pay, right? With that failure. All right, and you'll see a lot of examples of these traps and failure patterns. You'll see these inside that quick start class that I mentioned linked up in the upper right-hand corner. Now, what if we stall out at this measured move, right? What if we end up getting up here and we start going sideways up here? Because that could definitely happen, right? It definitely could. If we start going sideways, we just talked about this, right? We know how to trade a bull market into a range, don't we? We find levels of support. We wait for the pullback. We don't confuse it with a reversal. We wait for the bears to come in and get short, right, on that pullback. And we then, of course, look for longs, right, going back up into that trading range, right? We trade that. Let me just kind of zoom in on this a little bit closer here, right? So we go up, right? We go up. We start chopping around, going sideways. We're holding at that level of resistance. We're finding our support levels. We're waiting under, right? We're waiting for the pullback. We're waiting for that failure into that first test, right? First test, trade rotation. As I mentioned earlier, right? We, of course, then pop up, get that pendulum, right? There's your big objective to the side. And then we look for that breakout going higher, right? Those breakouts going higher, the 1, 2, 3 breakout, the 2 try breakout that we talked about earlier. Okay? Those are some scenarios I'm watching for as we go lower, right? So failure, pullback, right? Breakout pattern going higher there as we go. All right. Trading sideways up at these highs, get a pretty good plan of attack on that. How do we short off the highs? Very carefully right now because, again, we are very bullish. We take out the overhead resistance, buyers once, buyers twice, back down. Or maybe we see the price go up and then all of a sudden, right, they rip right lower, 1, 2, 3 reversal off the high, 1, 2, 3 reversal, jump off the moving average, find that new channel. This is a trend change, right? 1, 2, 3 reversal into that first test is always the best test. Doesn't seem likely it's going to happen right now, but that's also something we can watch for. Okay, so again, we go up, take out resistance, buyers once, buyers twice, back down, right? Maybe back down into this range down here. And again, I'm just simply kind of marking the charts up, giving us some ideas here for tomorrow. Okay, that's how we sell it off the high here, right? We go up, buyers once, buyers twice, crashing back down, grab that new channel, right? And then grab that first test on the way lower. Again, doesn't seem likely right now, but we're going to wait and see what happens, right? So 1, 2 off the high, take off our resistance, right? We get that 2 try reversal off the high, and then we grab that, right, that first test off that channel going lower, right? If we really get lucky, it'll really collapse all the way back down to the base of that wedge. We'll see what happens. Okay, what do we pull back here right now? What if we pull back? If we pull back right now, we pretty much have a channel here. The problem, of course, is going to be this range. This range, of course, definitely has a magnetic pull to it. It's a very strong move up. It's a pretty good push higher here. Definitely nothing to get that excited about. As we met, we'll see on the oil chart here in a second what a much stronger move will look like, right? And we do want to be a buyer on it. So I'm not sure I'm too convinced right now just to buy aggressively here on a pullback. But if we do get a pullback here right now, this will be a channel setting up, as you can see. And what I'll do is I'll look for the bears to try to get short, right? Let them try once, let them try twice, get those stops in play, and right, hit them where it hurts. It's still a bull market here, right? So buying a failure, and then again, right, grab that first pullback on the way back up to retest the high of that channel. Okay, the reason why I want the bears to try twice down here is because of that range. And a lot of that's to do with the fact that I just don't believe those, if they pull back right now, that would really put a big dent in this whole runaway market, vision of this wedge, right? Because the wedge may not last for, it may not, right? If they pull back, that pretty much defeats the wedge. And at that point now, we'll basically trade it, right, like a spiking channel, basically. All right. So again, grab that 2 try failure. Again, 2 tries because of the range and the lack of strength going higher. And then, of course, grab that first pullback for that retest of that channel high. Pretty easy idea, right? Now, how do we sell it as it goes lower? Well, as I mentioned earlier, right, if the market was to pull back here and we're able to hold that pullback and make a strong run lower off that, that's called a 1, 2, 3 reversal. I can mark up that low, I can mark up that high, and I can look for that short off the high of that channel. Where do we think the bears would be trying to go in this case? Yeah, definitely down to that low, kind of the base of that wedge, right? That 16,320 area. We have a big range down here from earlier on in the week. So it wouldn't be totally shocking if the bears were able to hold this thing, take it lower, and then finish off that move, right, down to, back down into that trading range. It seems a little bit unrealistic right now, but a lot can change here overnight, right? Especially in these markets these days. So again, we kind of know how we're trading this thing as we go higher. Be on the lookout for a range, right? Definitely been on the lookout for a range up here. The minute this thing starts going sideways is the minute you go, okay, where's my support levels? Wait for that pullback, right? Get those failures, right? And then trade those breakouts, right? Going higher, right? We talked about the 1, 2, 3 breakout and the 2 try breakout. There are a couple more breakout patterns. Let's talk about that though on the oil. Let's keep moving here. Let's grab some oil here to finish up tonight's video. Again, we've got a lot of bullishness in the market right now. This is the one market that I think might be a bull in bear's clothing. And the reason why I say that is because we have this big bear move down from yesterday. That big move down, right? And if you look at it, it's an overall bear market overall. You got that big, not all-time high by any means, but, that big recent high there earlier on in the month of November. You could definitely see this is a bearish market overall right now. Now, of course, I'm not a long-term trader. I'm a short-term trader. So for me, the short-term momentum is most important for me. If you're a long-term trader, then by all means, use the long-term trend. I'm a day trader though, so for me, the short-term momentum is what's most important for me. As you can see here, the buyers definitely have control of their short-term momentum. You can see what happened here today. The day pretty much began in a range, chopping around at those lows. They run lower and they spit higher. You can kind of see that slingshot off the low. The breakout leg is the measuring leg. And, like I always say, right, whenever you see a range on the chart, this one just happened to be the beginning of the morning, whenever there's a range on the chart, take that breakout leg, measure it up. That'll be your measuring leg. And at this point now, we're kind of waiting to see what's going to happen here. You could easily make an argument right now by saying, well, the buyers got what they wanted. Now it's time to go back down again. You could easily make that argument because of that long-term, kind of bearish momentum right now. My biggest problem though is look at the strength of this last move. Right? That's a very strong move. In fact, in my trade room, we call these open loop moves. In other words, anytime you see a strong breakaway move, right? Like back here, right? See how it barely pulls back to the moving average? Whenever you see it really pop and then keep going without even pulling back like that, that puts like a magnet right on that high. And it's almost a guarantee we're going to retest the high. So whenever I see a real strong pop up, I personally like to get underneath the moving average, get those bears to come in and sell short, right? And then just hit them right where it hurts. Grab the failure, grab the pullback, right? And again, go after the measured move. So a lot of what I've talked about so far, like on the Emini with the buy off the low of the range or the pullback in the Nasdaq, as you can see, this is what we're looking for, right? Get that strong pop up, get that pullback, rope in the bears, grab that, right? And use the measured move as the objective. Very strong move higher here, right? For the bulls. I would love to buy a pullback. I would love to get this thing down right into that low, get those bears to come in, get them to commit going short. I'm not going to try to pick a bottom on this, but once those bears come in on the short, now we know, again, remember, yes, it might be long-term bearish, but short-term, though, a very strong pop going higher. The odds are pretty good unless something changes big time overnight, which can easily happen, by the way. Overnight markets can do whatever they want. But as long as things stay together overnight here, we get that big pop up. Those buyers, of course, would love to rope in those bears, right? Use that failure into pullback combo for potentially another leg higher, right? 1 leg, 2 leg, 3 leg, right? Get that measured move going higher there. So just as we saw that failure into pullback combo here, failure into pullback combo there, failure into pullback combo coming off of the low of this channel. That's definitely going to be something to keep an eye on here as we pull back. Now, what you want to keep in mind, obviously, again, is how do we go short, right? How do we sell this thing if it goes lower? For example, let's say, for example, the market punches lower, we see a shallow pullback and a lower low in price. If that happens, you got to be thinking short now, right? Got to be thinking bear's going to love this little trap here, right? Find that new channel, grab that trap, grab that buyer failure setup, right? And we're going back down into that range, which of course is a magnet, and potentially back down to retest that low. So this could definitely, I think because of the overall trend here, I think this could definitely change pretty quickly here. But again, until we see evidence of that, you got to be a buyer, right? Got to be a buyer on this. So if we do pull back and they keep it going, number two, right? If they just, come back, pull back, hold that moving average, jump off the EMA, now you really know, right? Didn't do it last time. Will they do it this time? If they do, again, don't keep trying to force it. Find that new channel. Drill down to your faster time frame. Right, this is a 3,000 tick chart here on the January 2022 contract, which is crazy to say 2022 right now. But January contract for next year, right? Grab that short. And again, a lot of times these types of moves, a lot of times as they go lower, they're going to look like this, right? They're going to be something like this, where they trap above a prior high, they get above the moving average, the buyers will try to get into it, they'll fail, right, and go collapsing back down, right? Trap, failure, pullback combo. You'll see a lot of examples of those on the oil, on the E-minis, on the Nasdaq, on the gold as part of that quick start class. Right, a lot of examples how we use those entries in our trade room. All right, so that's the way I'm going to short or look to short this thing, right? As we go lower here, as we pull back, going higher. If we go sideways, you know the drill. Yep. If we go sideways, we trade that rotation, right? We wait for the pullback, we wait for the failure, we trade the turn with that new channel. It's it's relatively simple, right? Relatively simple, right? The amount below is the amount above, right? There becomes your target. You're buying that failure. You're buying that pullback, right? To run the sucker back up. And then again, if we break out, right? We break out going higher. You get a couple breakout patterns on our radar for it as well. One more thing too. What if we keep going higher? Do you see that wedge? You see where it puts us? Yeah, right back at Friday's close. Don't be surprised. Don't be surprised if all three of these markets wind up right back around Friday's close here. It's very common, especially these days, for whatever reason, for the market to open up on a Monday, right? Go up, go down, go sideways, do whatever it wants. But by the end of that week, it's right back to the previous Friday's closing price. And it's definitely going to be on our radar, that 79.54. And usually, once you get into Wednesday, Thursday, Friday, those Friday close prices, they tend to act like magnets. Now, we talked about wedges earlier on today, right? We talked about wedges and the fact that how do you trade a wedge, right? You look for traps. Right, so as we go higher here, we look for traps around the edges, right? So traps around the edges, grab those traps, and then once it starts to get, a little bit tight, right? We start getting some, there's no more leg room in there anymore. What do? We wait for the pullback. We know where the wedge wants to go. It wants to go to the vertex. And we wait for that pullback. We don't confuse the pullback with a reversal. We let the bears get short on the pullback and we buy, again, same thing, right? Failure, pullback combination. Failure, pullback combo. As you can see, guys, we're not trying to reinvent the wheel. Once you figure out what works, just keep on hitting that setup over and over and over again. There's no need to be scanning for hundreds of different markets and dozens of different patterns. You ask any professional trader, they'll tell you we keep it very simple, right? Couple markets, couple setups, keep it simple. As I've mentioned many times in my psychology videos, we don't want to try to do everything. We want to do a couple things really, really well. And that's really what I focus on here at School of Trade. Doing a couple core setups really, really well on our favorite futures market. So we'll see if it keeps going higher here. If it does, again, we'll look at this as a wedge. I would not be afraid too if it really pops up, right? If it really pops up, jumps up, shallow pullback, higher high in price, right? Grab that trap entry, kind of a 2-try breakout, right? Going higher there. If it pops up, don't be afraid to use that prior high, right? Pull back, roping those, right? Roping those bears on the pullback as well. Remember, anytime we see a strong move in one direction, there's a very good chance they're going to buy up, right, that last pullback. Trapping those bears, right, and keep on hitting them every time we keep making those new highs. All right, guys. Now, I'm sure I missed a couple things here tonight. You know, the markets are always full of surprises. So tomorrow morning, 8 o'clock Eastern time, I hope I'll see you there with me. Again, I'll put all of the membership links you guys need. I'll put everything you need, including access to our free quick start class. I'll put all those links in the description of this YouTube video. Grab those links, get registered for tomorrow's trade room, grab the free quick start class to learn the strategy. Whatever you do, don't trade on your own out there. I get you back tomorrow morning in the trade room. Hopefully I'll see you there. If not, have a great options expiration Friday. Remember, be careful tomorrow, right? Over lunch, right? We'll see if we get the afternoon going. Usually going to be a relatively small window on a Friday morning, but hopefully we'll get that kind of afternoon surprise tomorrow afternoon. A pretty good day tomorrow in our trade room. That's it for me, guys. I'm out of here for now. Drop those questions in the comment section below. Call that toll-free phone number if you have any questions. I'm always here to help standing by if you need me. That's all for me, guys. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.